Hey traders, welcome back to uGenesys. In today's video, we'll explore one of the most reliable and accurate reversal chart patterns in the world of trading, the head and shoulders. So let's dive in. The head and shoulders pattern is characterized by three peaks, with the outer two being similar in height and the middle peak being the highest. This bearish reversal pattern begins with an uptrend marked by two higher highs, 1 and 3, and two higher lows, 2 and 4, forming what we call the left shoulder and head. Point 5 then creates a lower high, lower than both points 3 and 1, shaping the right shoulder. This pattern signifies the end of the upward trend, but the reversal is confirmed when the price drops below the neckline at point 6, moving past the previous low at point 4. The pattern is further confirmed when the price breaches the neckline support, 2 and 4. It's also worth observing the steepness of the ascent into point 3 compared to point 1, as well as the ascent into point 5 compared to point 3. If the ascent becomes less steep, it indicates that the bulls are becoming less aggressive and the upward momentum is losing steam, further increasing the probability of a reversal. The head and shoulders chart pattern is considered one of the most reliable and accurate reversal patterns by traders and analysts alike. Let's summarize its key characteristics: a rally to a new high followed by a decline, an uptrend forming a higher high, a second decline, a final rally attempting another higher high but fails. The line connecting the bottoms, often referred to as the neckline, doesn't have to be strictly horizontal. Its slope carries important indications. A downward slope signals bearishness, as the price formed a lower low before the right shoulder. An upward slope signals bullishness, as the price formed a higher low before the right shoulder. When a head and shoulders pattern appears during an uptrend, it indicates a major reversal in the making. The strength of this reversal, measured by the decline following the breakout, is often proportional to the preceding rise. Keep an eye on volume during the head and shoulders formation. Typically, the highest volume occurs at the left shoulder, but tends to decrease by the breakout point. A rising volume trend is more favorable in this scenario, and that wraps up our exploration of the head and shoulders pattern. Now you have a powerful tool to identify potential trend reversals in your Forex trading. Remember to like this video and subscribe to our channel for more valuable insights. Happy trading!